Welcome, and thank you for tuning in. You're listening to the Beyond 50 radio program. I'm Daniel Davis. So you're thinking about starting a business, or perhaps you've started a business and you're wondering, how do I keep going when money seems to be running dry and I can't find clients and keep things going? Many people find these kind of challenges, especially if they're first-time entrepreneurs, or maybe they're finding themselves on a second and third go-around and they scratch their head trying to figure out how come everybody else can make it, but I can't seem to get it going. Joining us here on the Beyond 50 radio program today is an expert who's had more than 20 years of experience as an attorney and an advisor for mission-driven enterprises. Our guest today has helped her clients raise millions of dollars from values-aligned investors and raised over $1 million for her own businesses. She is also certified as a coach by the International Association of Women in Coaching, and she offers critical advice for entrepreneurs to design a strong capital-raising plan that fits who they are and provides all the steps for how to do it. Her newest book is Raise Capital on Your Own Terms, How to Fund Your Business Without Selling Your Soul. I'd like to welcome to the Beyond 50 radio program today our guest, Jenny Kassan. Jenny, thank you for joining us here on the program today.
Thank you for having me.
Wow, 20 years. You've been out there in the game quite a while. You've probably seen a lot of things, and you wonder why people do the things they do, don't you?
Yes. I've definitely seen people who have gotten bad advice and raised money from investors that were totally out of alignment with the founder, and they lost control of their business or were pushed to do things they didn't want to do, which is very sad.
So what is it, especially I just recently met with a venture capitalist. Not that I was out seeking it. We just kind of crossed paths, and he actually wanted to talk with me about, he was sort of had the same attitude, I guess, that you do about people who should be out there, and trying to start business and get things going. But they find that they're, kind of selling their soul, to the devil rather than getting, what they believe to be, touched by an angel. What goes on there? What actually happens?
Yeah, well, I think the big problem is a lot of people don't really know what their options are when it comes to raising money. So the most common thing is people just don't raise money at all, and they try to use their own resources like credit cards or, putting a third mortgage on their house. And that's a really bad idea because that just creates so much stress and pressure. That's what we call bootstrapping, and that's a really difficult thing to do. And then the other thing people do if they realize they really do want to go out and find an investor is they think that they have to go for that venture capital style of investment, which has, is a certain philosophy of how the investor is expecting you to run your business. And if that's not really a fit with what you want to do with your business, it's a really big waste of your time to go for that kind of funding. Because first of all, it may be very hard to get because it won't be a fit. Or even worse, if you do get it, you really might find yourself at odds with your investors and even being fired from your own company.
Now, you talk in your book about impact investors. Tell us what that is exactly.
Yeah, so more and more investors are really wanting to put their money into things that fit their values and what they want to see happen in the world. So there's a growing number of both professional investors and just regular folks who are looking for investment opportunities that they can just feel really good about and say, hey, I love what this business is doing. They're making the world better in some way, and I want to invest in that. So that's a really exciting development because so many businesses, I meet so many business owners who, yes, they want to make great money with their business, but they do also want to do something good in the world, like maybe create great jobs or, give back to their community or provide a solution to a problem that they've been seeing that no one else is solving. So it's wonderful that in fact, a majority of investors want to invest in alignment with their values. So if you can find investors like that fit your mission, it's really great. On the other hand, you do also have to check and see what are those investors, what is that investor's investment model? It's often the case that they invest just like venture capitalists, people who call themselves impact investors. invest just like venture capitalists and expect that same high growth, grow at any cost and then sell as quickly as possible. So not all impact investors are going to be a good fit.
And it's funny because a lot of people actually have an idea what they think an investor or, let's say, a venture capitalist is. How do they expand their vision of what that is? Where do you start, for instance?
Yeah, I think the first thing to do is just to realize that actually a majority of the population of our country is made up of investors. A lot of people don't think of themselves as investors, but if you have a retirement account or you have some money in a mutual fund, you are an investor. And so that means from the entrepreneur's perspective that a majority of the population of our country is a potential investor. You don't have to go after that tiny, tiny pool of investors that are what I call professional investors. So that would be venture capitalists or, what we call angel investors who are actively out looking for deals. Because according to my calculations, those professional investors only make up 0.3% of the total population of investors in our country. So if you're focusing on them, you're really leaving out a lot of great potential investors.
Now, you also talk about if you're going to seek an investor, for instance, and we're talking about, first of all, expand your idea of what an investor is that you have to craft what you consider to be a well-designed offer. Now, what does that mean specifically? Yeah, because a lot of times people are thinking in their terms. For instance, I actually had an acquaintance years ago, and he had this big vision. His whole goal, I thought, was kind of funny because he's out there talking about all these millions of dollars that they were waiting to come out of Mexico for some reason, was stuck in Mexico of all places. And I said, so what's your goal once the money gets to you is to make sure that it's all spent? And I thought, well, that doesn't make any sense. How do you expect this dream to continue if the money's just all blown and you're moving forward, if that actually happens? But sometimes a lot of people actually think that way. And so when you talk about crafting a well-designed offer, obviously investors would like to see a return on their investment. As you're also talking about, they also want to see it do good. But what kind of a designed offer are we talking about here?
Yeah, so I think one of the biggest mistakes I see entrepreneurs make is they'll just use some kind of an off-the-shelf tool for raising money from investors without really thinking about whether it really fits their business and what they think is likely to happen in their business and what they want to happen in their business. So, for example, a lot of lawyers, if you go and talk to them and say, hey, I want to raise money, they might hand you something called a convertible note. And a convertible note is really designed generally for a company that's going to be growing very fast and raising multiple rounds of capital. But what I find is that many businesses don't really need to do that. If they could just raise some capital now, a few $100,000, to get things off the ground and buy some things that'll really help them take off, they may never need to raise more money. So I just think it's really important to think carefully about what is exactly your relationship with your investors. How are your investors going to get paid? And there's many ways that they can get paid. It doesn't have to be just through a sale of your company. And also you want to think about, do I want to give up any control? A lot of people think that the minute you sell equity to investors, or an ownership interest in your company, that you're having to give up control. And it's not true. I have a lot of clients that offer non-voting equity interests in their company, so you don't have to give up control. So it's very worth it to spend some time thinking about the details of the legal relationship you have with your investors so that they can be fairly compensated, but you can also stay true to your mission and goals.
Now, it's funny because a lot of times people really don't go into thinking about the conversation they have when it comes to talking with a potential investor. And so they start by asking a lot of questions, about what's important to the investor themselves rather than actually thinking about what it is they're out there trying to do in the first place. How often do people go out there with that misconception rather than trying to reverse it and say, this is what I'm really passionate about doing? And really selling, I guess, on the idea of why they've decided to take this step and why they're talking with an investor in the first place.
Yeah, I think people do waste a lot of time talking to the wrong investors. And it's really, it's really worth thinking about. I have a whole chapter in my book about thinking about who your ideal investor is. Because if you're talking to someone who isn't really excited about what you're doing and they don't really get your vision, and it's unlikely they're going to invest, and you're probably wasting your time. And there's got to be people out there. I mean, if your business is viable and has customers, for example, and your customers are excited about what you're offering, your customers might be a great place to look for potential investors, because they're already spending money with you or wanting to spend money with you. They get the value of what you're doing. So yeah, just don't waste time with people who are, don't really get it, aren't a fit. Move on and find the people that are. And if you do have a meeting with someone who you can tell up front isn't really getting it, go ahead and end the meeting and move on. Don't waste your time.
Because you say there's actually a lot of people out there, it's just a matter of, I think, it's kind of like buying a home, I guess. You might go out and see a couple of homes and somehow, well, I'm going to go ahead and go after this one because I'm doing two things. I feel like I'm wasting the realtor's time, and I'm going to go ahead and just settle. And the fact is if you actually get out there with frequency, you begin to know what it is you as a feel for what you're looking for, what you want, what really works. And I don't see this as being any different, actually.
It's so true. And I think, probably something that's even worse than home shopping is that if you can't sometimes settle, even if you want to settle on an investor who's not a good fit, they probably won't be that interested either. So it really is, it's actually for the best. When someone says no to you because it's not a good fit, you should celebrate, because you really don't want those investors that aren't a good fit.
Now, talking about investors, it's kind of funny because I think, it's funny how people will look at particular things and they have a perception of what they are. So investors, sort of like people, and this is kind of a funny illusion that broke for me years ago, is I was actually at a fundraising event that actually, what it was a monopoly competition. And so here were a lot of people. There was a lot of free food and free wine, and it was funny how my illusion was kind of broken here about the idea of somebody who was, a business owner, if you will, is that you seem to have the perception these people know something that I don't, especially if you're first starting out in business for yourself. And after going to this event and talking with these people, I realized, these people aren't any smarter than I am. And the idea you talk about in your book is that investors are pretty much just average American adults. Now, how would you go about, or when did you feel that perception change for you, that you might have had that same idea about, well, this is what a business owner is, or an investor actually is? And what was that moment that changed for you where you realized, well, like me, they don't seem to be any smarter or know any more than I do. So it really changes the game a lot for a person. Yeah,
I've just seen so many business owners who don't have enough kind of belief in themselves. They're constantly doubting themselves, which is so natural. I mean, running a business, it brings up all kinds of fears and doubts and worries, but sometimes you look at someone and they might look very impressive and they might be some kind of a professional investor. And in fact, there's even a term where they call some investors, like venture capitalists, they call them the smart money. And the idea is like, oh, I'm going to bring these people on and they're going to know exactly what to do to solve all my problems. And I've just seen so many examples where what actually ended up happening. I mean, I know of a company right in my area that ended up going bankrupt. And I wasn't an insider there, but I believe from what I've heard from some of the people who work there that a lot of the reason it failed was that the investors who had come in and sat on the board thought they were so smart, but really what they ended up recommending pushed the company into the ground. So I think entrepreneurs need to trust themselves more. Your business is your baby, you know it better than anyone else. So don't be so quick to try to find that investor that you think is going to come in on the white horse and save the day, because it often is the opposite.
Right, exactly. It's sort of like actually dealing with PR people. All of a sudden, they feel they've got the keys to the golden gate to the person that you want to talk with. Look, okay, we'll go ahead and let you play that game, but a year from now, if I need to wait that long, I'll be talking with those people, and you'll be irrelevant.
Exactly. We have to trust ourselves more. I just think a lot of entrepreneurs, and I have to say I work a lot with women entrepreneurs, and I see it even more with women, doubting themselves, not feeling like they have what it takes to get to that next level.
Yeah, and I think, too, one of the things that, if you hear this phrase come out of someone's mouth, go the other direction, say, I don't believe that we have things aligned, and that is, well, this is the way it's always been done.
Exactly.
I remember talking with somebody who actually took over the advertising for her father's business, and we were talking with them, and we had been doing something very successful with them that really, when you think about the rate of return as far as money put out and money coming in, was excellent. They were spending a lot of money on TV ads and so forth, and basically they were doing a low-value style of advertising, sort of like the furniture companies that spend all this money on advertising, and then they turn around and they're selling cheap furniture, and basically you see them go out of business in about a year. And I told her, I said, look, this is what we're doing here, and I know this is bringing in a lot of customers. And so we were actually interested in saying this is the kind of business we're in, which is radio. What would you think about spending just a little bit of money? It's certainly not the kind of money you're spending with television and radio ads, which a lot of them weren't that good. And I was actually crafting radio ads, and I said, these would work a lot better for you if you're going to do that. He says, well, no, I would rather just go ahead and continue to do things as we've been doing them. Okay, well, that's fine. You go ahead and do that. Well, it was actually about almost 2 years later they filed Chapter 11 bankruptcy protection.
Yeah.
And I said, see, that's the problem with your thinking. You think, you're not looking at ways that you can do things. You're just playing it safe, and safety is going to end up, of course, boom, well, there you go. And how often do you see people do that?
Yeah, well, the entrepreneurs I know aren't really like that. They're very creative people, always thinking of new ways of doing things. I feel like that's just kind of the nature of entrepreneurs, which is why I love working with entrepreneurs. But it is true that sometimes people in the finance industry and the legal industry for sure are really set in their ways of this is how it's done. This is how it's always been done. This is how it's done. So I think that's where entrepreneurs can run into a lot of problems, because these people come in acting like they're so smart and they know everything, and so the entrepreneur ignores their gut instinct to do something different and ends up suffering. So I think that's why you have to be really skeptical of people who come along and claim to be experts. And again, trust your gut more.
Right, exactly. Now, where is, you talk about, for instance, where to find mission-driven investors, where's a good place a person can start making those kind of connections?
Yeah, well, it really depends on your particular business. As I said before, one interesting place to consider starting is your customers, or if you're not in business yet, the people that you will be targeting as customers. Those are people who are naturally aligned with what you're doing. But I think what I love to have people do, and I have a whole chapter on this in my book about figuring out who your ideal investors are, and then once you kind of get an image of who they might be, it becomes easier to think about where you might find them. And one thing to also think about is your ideal investor may be a lot like you, because they're passionate about the same things you are. So where do you like to hang out? What conferences do you like to go to, or what, publications do you like to read? Where do you hang out on Facebook or whatever, So anywhere that you love to spend your time and energy, that's probably where you're going to find investors.
It's just such an amazing book. People should pick up, mostly to help them change their perception of what they think about business people and, of course, themselves when it comes to doing this, and realize once they gain that confidence, then it becomes, I think, easier in many ways for them to have those kind of conversations that might lead them into directions they would have never imagined before.
Yes, I think that's so true. And I've experienced it myself. When I first started doing this, I was, your typical conservative lawyer, but I started seeing my clients raise money from investors that loved them and supported them and weren't expecting returns that were unreasonable. Then I started raising money for my own businesses, and I've just seen over and over again what's possible when you do open your mind to a broader pool of potential investors and design an offering that really fits your goals and mission and values.
So how would you suggest people actually get started?
Well, you could start by checking out my book, and I actually do have some free chapters you can download on my website. But that's a great place to start, just to kind of think about, creating your plan. My book is all about creating a plan, because so many people, when they're raising money, they may just sort of jump in haphazardly. And I think it's worth taking a couple weeks to step back and create a plan, because if you have a plan of how you're going to raise money, who you're going to talk to, what you're going to offer, of course, the legal compliance piece is something you really should be on top of before you start talking to investors. So if you have all that together, it'll be much more, it'll go much more quickly, it'll be much easier, instead of just that kind of buckshot approach where you're just kind of reaching out to anyone who has the word investor in their LinkedIn profile.
Now, you mentioned a particular magazine, Fast Company. What's that all about there?
Yeah, this is all about a certain style of business and investing that I call the venture capital model or the Silicon Valley model. And this has to do with a business that's on a very fast growth path. And these are companies that you've heard of, a lot of them, that actually never make a profit, or at least for many, 10, 20 years, don't make a profit at all, because their whole goal is growth, get as big as possible. And the way their investors, who are usually venture capitalists, make money is through, if you grow the company fast enough, you can do an IPO, a public offering, or sell the company at a higher value. And so that's a model that fits for maybe 0.1% of the businesses in our country, a business that's usually a tech business, or maybe some software, or some, very few businesses that really fit that model. But most businesses, that's just absolutely a bad fit. But for some reason, that model of business growth and investing has gotten a lot of attention over the years. So it used to be better attention. Lately, there's been a little worse attention because of some of the bad behavior of some of the men in that industry. But it's an industry that has actually a very small number of investments in business, in a small number of businesses, but an outsized awareness and reputation around the country of, these are the people that invest in business. So I just think, and Fast Company, is one of those magazines that really glorifies that model. And there's many magazines and websites that do that. So I just think, kind of putting that aside, if you're not that kind of a business, which you may be, maybe that is what you want to do. But, for the 99.9% of businesses that aren't on that path, don't even listen to that. Don't pay attention. It doesn't apply to you. It's a very tiny percentage of businesses that actually are successful on that path. And there are many, in that model, part of that model is the assumption that probably 9 out of 10 companies actually won't make it. Which is why they expect such high returns, because they're making these bets and they know probably 9 out of 10 won't make it. So it's a really grueling path where your investors become your boss and may fire you. I just think my clients have no interest in that kind of a model, so I try to kind of ignore it.
Now, I'm curious, Jenny, if you could share with our listeners that there are apparently some time-tested ways that you talk about in your book, that there's about 7 of them that you can find where investors are right for you. Why don't we talk about those a little bit, and so that we can give our listeners an idea what they are and what they should be looking out for?
Can you say a little more? What I didn't totally get that question.
Well, it was you share 7 time-tested ways to find investors that are right for you, I guess is a good way to put it.
I'm embarrassed to admit I'm not exactly sure what you're referring to.
Well, we'll kind of give it a shot. What are some time-tested ways that you are aware of that might be a good idea for people to pursue?
To find investors?
Right.
Yeah, well, again, I'd say starting by going through a planning process and really, taking those steps. I have a 6-step process in the book, and, that involves really getting clear on your goals and values, getting clear on who your ideal investors are likely to be and where to find them, designing your offering, so really making sure that the legal relationship you have with your investors fits your business model and your goals, figuring out your compliance strategy, because raising money from investors is regulated. Every time you bring on an investor, there's some state and or federal law that is being implicated. Actually, always federal and probably state as well. So you really want to get clear on that piece. And then designing an enrollment strategy. So, how do you actually go out and, get investors to come and meet with you? And then once you meet with them, what do you say in the meeting? And then also just really addressing some of the mindset issues that can come up when you're raising money. This doesn't happen to everyone, but from what I've experienced and seen my clients experience, raising money can push a lot of our buttons. We have a lot of kind of old beliefs about money and about our self-worth and all kinds of things that you may haven't even thought about because they were installed in you when you were a little kid, and those things can kind of get triggered when you're raising money. So kind of being prepared for that and having tools to address it when those negative thoughts come up that might stop you. I've had a lot of clients that somehow all of a sudden got really busy doing other things when it came time to go out and start raising money. And that's really common because it can, for some people, it can just be a really scary process. So just, getting ready to deal with that and then just going out and doing it, and knowing that it's not always going to be the smoothest process. You're going to get no's, you're going to have uncomfortable conversations, but just keep going. And I've done it now. I'm on my 4th time doing it now. And I find it does get easier and easier, and even it becomes fun, believe it or not.
I'm sure it does, and it should be fun because then your creativity begins to flow quite a bit.
Yes, and you start trusting yourself more, and you find the more you trust yourself and are your authentic self around investors and don't try to pretend to be something you're not, it actually gets easier because those investors that are a good fit will be really attracted to, when they see like, oh, this is who this person really is, and I see their passion, and I see why they care about this, and I see their commitment, and it just makes them want to invest.
Mm-hmm. Now, you also talk about avoiding, as you talked about earlier, what they call bootstrap investing, where you're using your own money. So what is it that people feel that they have to go that direction, and how can they kind of go around that, I guess?
Yeah, I think it's really common for people just to completely write off the possibility that they could even ever think about raising money from investors. And I think part of the reason for that is they hear so much about this venture capital model, and they say, oh my God, that's not for me. I guess I can't raise money. And they don't realize that actually, most businesses raise money using different strategies. That's a very, very small percentage. But they don't know what their other options are. So it doesn't even, I talk to so many entrepreneurs where it's like, really? I could raise money? Are you sure? So for most entrepreneurs, I'd say it doesn't even occur to them. And so their only other option is the bootstrapping model, which is where you basically have to use all your own personal resources, which can get very scary very fast because most businesses, you do have to invest resources in them for them to be successful. If you have a hideous website, or if you're trying to wear all the hats in your business and never sleeping because you have so much to do, or, you don't have an accountant, so you have to do all your own books. Like, those are things that really are likely to lead to an unsuccessful business. So you have to spend money on those things. And if you can either try to use your credit cards, or you can raise money from investors. Also, a lot of entrepreneurs think, if I just work harder, I'll get to that break-even point where I can finally spend the money to have a great website or to have an accountant. But it's kind of a catch-22 because it's hard to grow your business when you're limping along with not the right resources and you're exhausted and stressed out because you're trying to do everything in your business. So I call that the bootstrap trap, and it's very common. And then I've found entrepreneurs often blame themselves for failing at that. And I say, usually that's not any failure on your part. It's that you were trying to do something that pretty much was impossible. So
right.
Don't even try it. Don't do that, obviously most of us are going to do it for some period of time, but at some point we need to be like, okay, the business has a great, this idea is great. I feel confident about it. Now I've got to go out and get some money to make it happen.
Now, what's the best way for a person starting today to begin to clarify their values and goals? What would you suggest they do?
Yeah, there's in my book, there's a lot of questions that I have you think through. There's lots of different ways to think. There's different parts to that. So one part is your values, things that you really want to make sure your business stands for no matter what. So, for example, maybe you are really committed to always paying a living wage to your workers no matter what. Or you're always committed to giving 1% of your revenues back to the community, to charity. Or you're always committed to never using artificial flavors and colors in your products. So those are some of the values. And then the goals are more about what you want your business to be like, given how you want to live your life, basically. So, because it's sad to start a business and then have that business turn into something that you don't enjoy and that makes your life difficult. So maybe, so I think getting really clear on what do I want my role to be in the business? What do I want to happen to the business over time? And a big question is the question of exit. So your exit has to do with how you'll eventually move on from the business and also how your investors might eventually get out of their investment with you. So, the Silicon Valley / venture capital model is that you'll sell the business and you're expected to focus on nothing but trying to get that business to a point where it can be sold as quickly as possible. But a lot of my clients are like, no, I really don't have an interest in that model. I want to, grow my business slowly over time. I don't really have a plan to sell it. Maybe someday I'll sell it, but I really love it, so I don't want to sell it anytime in the foreseeable future. Or maybe I want to leave it to my kids, or maybe I want to sell it someday to the workers. So getting clear on kind of that long-term plan, because that's going to affect what type of relationship you should have with your investors and how they're ultimately going to get paid. And you don't want them to have expectations that aren't in alignment with what you want to actually do.
It's just such a fascinating avenue, and as you said, as you get out there more and more with frequency and you begin to explore these things, I think a lot of what happens is you begin to change a lot of beliefs, as I was saying earlier in the program, and perceptions about what you think this all is, and you realize, this is a game. I'm beginning to learn the rules, and you begin to play it well. It's just like Monopoly, for instance. You learn how to play by the rules, and you learn to play with frequency, and you get better and better at it. And really, in the game of life, it's pretty much the same way, isn't it?
Yeah, and also, making up some of your own rules to the extent that you can. Obviously there's some legal rules that you can't mess around with, but, within the process, kind of being willing to try something different that maybe no one else has ever done before. I've had clients say, when I pitch my investor, I'm going to do it in the form of a dance or a poem. So, just think about really creative things you can do that express who you really are. because the more true you are to that, the more quickly you will find those investors that absolutely love you.
Now, is there a website people can actually find out more about your book and your work, things like that?
Yeah, so my website is jennykassan.com, JENNYKASSAN.com, and there is a page on there for the book where you can download some free chapters and read some articles that are, that were written about the book, so you can kind of get a sense of what it's all about. And there's also some other free resources on there, like, for example, we have a tool that you can download to help you create your projections. A simple, sometimes people hate dealing with spreadsheets, but this is the simplest one I've seen to start looking at some projections. Because if you have good financial projections, it's really helpful for raising money. So yeah, definitely there's tons of resources there. And join our mailing list so you can hear about the latest news. We're working on all kinds of tools to make it easier for regular folks to invest in businesses they love, because there's still not that much of that going on. There's most investors who aren't professional investors are still mostly invested in Wall Street and your mutual funds and all of that. So we're always working on projects to kind of change that, and we'd love to. We're trying to move massive amounts of money from Wall Street to Main Street.
Now, lastly, I want people to understand, too, that there are some compliances, especially legal ones, they need to consider. Let's talk about a couple of those.
Yeah, so that's, my first work in this area was on that piece. We call that step 4 in the process that I lay out in my book, deciding on your compliance strategy. And I think this is part of the reason people don't get that creative when it comes to raising money, because they can be kind of intimidated by the legal piece. And then lawyers sometimes are a little too lazy, or I don't know why, but they just don't bother to tell their clients about all the different options. So the good news is there are many, many different legal compliance pathways that you can use that will allow you to do various things that will make it easier for you to reach your ideal investor. So there's certain ways you can raise money where you can actually publicly advertise the fact that you're raising money. There's ways you can raise money where you can have thousands of investors. So you could have investors coming in with, have your minimum investment very low so that it makes it accessible to more people. I've had clients that have had over 1,000 investors. Mm-hmm. So, and everything in between. And, you can open it up to everybody. You don't have to limit yourself to just wealthy investors. So there's so many different options, but you do want to just make sure you're clear about what compliance strategy you're using, because if you just start going out and raising money, you might find that you've violated the law or you've done things that will preclude you from choosing certain strategies in the future.
Oh, it's also fascinating and mind-opening, and I can see how your book can give a lot of people a lot of clarity in this arena and go, oh, so this is what it's all about, and get their own creative thinking flowing there and really move themselves into directions they would have never imagined.
Definitely hope so.
Well, Jenny, thank you so much for being on the program today. And for our listeners, if you wouldn't mind going ahead and giving out that website one more time.
JennyKassan.com, JENNYKASSAN.com.
Very good. Jenny, thanks for being on the program today.
Thank you.
You bet. We want to thank you, the listeners out there, for tuning in. You can also discover more by visiting us at Beyond50Radio.com. That is the number 50. We do encourage you to sign up for our free weekly e-newsletter to keep up to date with what's going on in the world of Beyond 50, as well as our upcoming shows. I'm Daniel Davis. Thank you for joining us. This is the Beyond 50 radio program, and remember, live your day past halfway.